Okay, a very good afternoon to everyone. I think I speak for all the influencers here. You see them across the screen last time, and today you see them in real life. And sometimes I think when you create content and then you see the numbers on your views, you can't really tell how many people are actually watching. And here we have a very good audience here. So coming back to today's panel, specifically, I think we have the title here, From Ideas to Execution, How Modern Investors Are Winning Today. So my role as a moderator today is to really to really ask all of them on how they are investing and what specifically can we learn from them as well. So maybe for a start, I really think that it's an understatement to say that markets are extremely volatile these days. And for a start, maybe I'll get all of them to do a very quick introduction about themselves and what are their current investment or portfolio strategy. So maybe Kelvin, you can take the first question first.
Hi guys, I'm Kelvin from Kelvin Learns Investing. My main strategy is to hold stocks plus ETFs, while at the side, I sell some options for income.
Okay. Moving on, Xuan Kai, current investment strategy.
Actually quite similar to Kelvin as well. Long-term US ETFs and option selling for potential monthly income as well.
Okay, Don?
Hi, my name is Dawn, Budget Babe. I've been writing and teaching personal finance for more than a decade. So when it comes to strategies, mine hasn't really changed over the years. It's really more on value and growth. And I invest across 3 markets, Singapore, China, Hong Kong, as well as the US.
Audrey?
Hi, I'm Audrey. So my strategy is pretty similar to most of them, but I do 80% of value stock, 20% of monthly ETFs, and some options trading to just get some income. And then sometimes I swing trade to de-risk whenever I feel like the market is quite volatile. Yeah.
And lastly, Aaron?
Hi, I'm Aaron from the Weeblings. So generally for me, I actually am a lot more of a trader, but I don't day trade as much. I'm more of a swing trader. So I normally hold my positions from about 1 week to about 2 months. That's generally what I like to do, and I also share it online. When it comes to investing itself, I also DCA into US equities. I do have some other investments in like commodities and gold, but generally most of my investments are in Singapore equities and in US equities.
When you say that you're trading, right, do you specifically use options or any other different products?
So I generally have 2 types of swing trading strategies. One of it is buying equities itself. Usually that may be leverage, so sometimes I trade futures as well. But the other side, which I'm a lot more active right now, is on options trading. So specifically, I'm trying to sell something called a delta neutral strategy, but it's basically just buying and selling a bunch of option strategies that allows me to profit if the market goes sideways. So if the market is $100 today, and 1 week later it is still at $100, I do make some money, usually about like 10%.
Actually, I think it's pretty interesting, even though they did say that their strategies are relatively similar. But that said, I think they have different geographies, they trade different products, but still at the end of the day, I think it revolves around, as influencers or financial influencers themselves, they are also talking a lot about staying invested in the markets. So I think through their sharing, actually there is a common thread throughout, which is I constantly hear this product called options. And interestingly, actually, I think they have recently all partake in a collaboration with Moomoo to talk a little bit about their 60-day options challenge as well. So maybe for a start, I think privately we had quite a few private conversations, and Dawn has a really interesting experience to share. So maybe Dawn, you want to share a little bit about your previous options experience and why did you decide to come onto this 60-day challenge with us?
Okay, so for me, it actually took a lot of convincing on Moomoo's part to get me to partake in the challenge. Because prior to this, a few years ago, I actually went for options classes and courses, paid courses to learn the skill sets from people who are very successful at options trading in generating stable income and managing their risk and losses. But they always say it's beginner's luck, but mine was beginner's bad luck. Because the first few option trades that I did lost me so much money. And then I realized that, hey, if I had just stuck to my same old strategy all along, which is to buy good undervalued stocks, right? Stocks that can grow, that are compounders, and simply buy them when they're on sale. And I can tell you which stock that was. It was Meta. Because if you guys remember this period where Meta stock crashed a lot because, people thought Mark Zuckerberg had gone crazy by investing in the metaverse. So I had the stock and then I did an option on Meta as well. And I lost so much money that obviously I didn't make back my course fees. I was in very, very bad losses and it gave me a bit of PTSD, so I didn't dare to go back into options trading. But Moomoo convinced me that, the data points actually matter. And in the Moomoo app, there are a lot more data points that they give for options, and there are ways to do it safely without taking on so much risk. So there was a difference between what I used to do on a different platform, which was not as intuitive. Not selling Moomoo here, but it really was the truth as to why there was such a big difference. So when they came to me, I was like, okay, then we give it a shot. But even then, my option strategy for this challenge is very, very safe. So if you guys have actually been following all of our series, I think there are a few other influencers who are not on this panel right now, but they have been part of these and you can see their videos. I think I'm the most play safe out of everyone.
So maybe you can share a little bit more in terms of what did you do in that challenge and why did you decided to choose that specific option strategy?
Okay, so for me, right, it's mainly the sell put. Because what I do is I buy good companies on sale. But what I realized is that sometimes when, let's say if the price is at 120, and I think it's only worth buying at $100 because that's where the margin of safety is, I would queue up, I would wait for something to happen, like bad news, and then when the price drops close to 100, that's when I will go in and buy. But there were a few problems because number one, I realized I'm the only one on this panel and in the challenge who's a working parent and a content creator at the same time. And when you have to juggle so many things, caregiving, your corporate work, your content creation side hustle, and then I have a book as well and a lot of other things on my plate, it is very, very difficult for me to react so quickly. So that it happened that many times the price would fall and I will realize one day later. And the price go back up already because bad news when it happens, if you look at Intel, right, boom, one day 25% drop, right? The next day got recovered a bit already. So you would miss it. And then you would think it's anchoring buyers. I saw it at this level. It's very hard to go back and adjust your pricing. So now what I do is I do two things. One is I still queue, but in case I don't get it, I put a sell put at the same price. So what happens is that if I get it, great. If I don't get it, then I am actually earning from the sell put, which gives me money even though I missed the stock. Yeah, but actually when I make that money, I always sian because I wish I got the stock instead. But at least I get something now, so I get paid to wait rather than having walk away with zero previously.
Okay, thanks Dawn for sharing. Maybe I'll move on to maybe Audrey to share your experience with the 60-day options challenge.
So I think when Moomoo approached me, they didn't know that I already been doing options for a bit. So I showed them my dashboard that I did on AI to kind of make my strategy lah. So they were like, hey, you want to join or not? So I was like, okay, try. And it turned out that I learned a lot more through this options trading challenge because I was like, wow, I must beat this S&P 500. So, but then when I asked MoomooAI, no, I didn't ask MoomooAI, I asked AI if I can beat the S&P 500, and AI said no. Then I was like, oh, it's GG, how? But eventually I found the best strategy based on what my risk tolerance is, which was a wheel strategy, which is to sell put and to sell call. So that's what I've been sharing.
Maybe you can explain a little bit more. So sell put, you come from Dawn's perspective. She's doing the first leg. And what happens in the sell call part?
Sell call is when I promise to buy to sell my stock at a certain price than what I acquired for, ideally, and I collect a small premium for that promise. Yeah.
Okay, moving on to maybe Xuan Kai. I think Xuan Kai have been following your IG recently quite actively, and you have constantly been telling people how much money you made from options. So maybe you want to share a little bit more in terms of this 60-day options challenge. What was the mindset going in? What strategy you used, and how did it perform after that?
So honestly, quite similar as well. I used the wheel strategy. But like what Dawn said, even though I call it the wheel strategy, most of the time I'm selling puts only. Then when everything, midway through the 60-day challenge, I got assigned the stocks. And it was not a very fun day because it was a $100,000 assignment on that day itself. So everybody is okay to do strategies, right? Until that day comes. And then you know that, oh, screwed. It will test your conviction quite a bit. So of course, after that, other than puts, I need to sell calls already, ma. Yeah, and it really tests your risk tolerance and conviction, especially when you see it dropping when you're selling calls, right? Because it's further and further away from the price that you got assigned with. And it's actually quite an interesting experience to feel that kind of, how would I say, almost a little bit of tension, a bit of nervousness when you get $100,000 worth of stock in the day itself. Yeah, very exciting, very interesting. But the rest of the challenge, of course, I'll be selling calls a bit more. Yeah.
Okay, moving on to Kelvin. For yourself, I think you've been sharing a lot about options trading as well.
For me personally, I've been doing options all along. So when Moomoo approached me, say, I want to pay you to talk about options, I'm like, oh, yeah, just do it. So for me, my option strategy that I did with Moomoo was a bit second level, which is credit spread, which is basically the usual sell put, sell call, but I add a second leg at the bottom or at the top. So sell put, buy put, sell call, buy call. So it's a bit like you can think of it as a stop loss. So because if you just sell put, if a stock drops through, then you have to buy the stock. But if you have a buy call, so it doesn't let you drop all the way through. You have a protection below. So the reason I did this was because not enough money to do. So my capital was limited, so I have to do a riskier strategy. Because for sell put, at least you get to buy the stock that you want. But for credit spread, once you stop out, you straight away get the loss already. So thankfully I didn't lose too much money. Overall I made money lah. So and the reason I made money was because I was disciplined enough to take profit. So the biggest reason people lose money when trading or when doing options trading is because they are not disciplined enough. So for me, whenever it reaches this 50% profit, I will just take profit. Then when it near to my when it breaches my strike, I'll just take the loss. Because if you are disciplined enough, options trading, let's say if you are doing like 70%, 80% probability of profit, over the long term, you'll get this overall win lah. So overall, sometimes you might lose money, but if you add up over the long term, you will make money lah, if you are disciplined enough.
So Kelvin, actually from this challenge itself, were there any realizations or learning points that you want to also share?
I think the biggest realization is that you have to be disciplined when trading options. So before entering a trade, you must have a plan, and not just like just sell put, collect money lor. You have to like, I collect money when it does well, but what if it doesn't do well? Like what if the stock goes against me? What is my next to do? Because before you enter the trade, you are doing this without any emotion in mind. But when it goes against you, you're like, oh, 笑了, oh. So you have to think back, like back then, what's your original plan to handle the loss? So yeah.
Okay, thanks for sharing. So I think throughout this entire panel, I think based on what Aaron has shared just now, I think he's the most considered sophisticated, where he talked about something like being delta neutral. So maybe I'll just get Aaron to share a little bit more in terms of your strategy, the thought process behind it, and how were you trading it, and why do you choose this strategy instead?
I think you come back to what Xuan Kai said just now as well. Like that risk tolerance. See, he's like, oh, $100,000 at risk now. It's actually very, very scary for me. The reason why I started out like that as well, but I eventually pivoted to what I'm doing now, because naturally I'm someone who's very risk averse, which is also why I don't just throw all my money into the stock market. It sounds a bit strange that someone who is very risk averse is trading, but the nature of trading is I'm only in the markets for like 1 week, maybe 2 weeks, sometimes up to a month. And then after that, when there's no opportunity, I am out of the market. And then it can drop 50%, like, COVID, that happened, and I am out of the market. So I'm not holding any risk. And that's just driven by my nature, being very risk averse. And which is why I eventually moved towards developing something called delta neutral, or some people also call it non-directional option positions, but it sounds a bit complex. But essentially, what I'm trying to do is to make sure that as long as price stays consistently around a certain range, let's say between like $90 and $110, I would be able to make money from there. So it's a little bit different. Most people think of trading as like buy low, sell high, buy low. It's very one-dimensional. You only make money when price goes up, or when price goes down, you lose money. But with options, what it allows you to do is to broaden up the way that you can potentially trade. Instead of just saying price go up, I make money, price go down, I lose money. Now we add the dimension of time. So if price goes up very quickly, then I can make even more money, or vice versa. Or if, price stays flat over a duration like 2 weeks, then I can also make money. And even then, if price goes down slowly, I may still be able to make money, because there is that added dimension of time where over time, you are able to earn. And it's something known as, the terminology that you can search for is called theta decay. But essentially, it's kind of like, I have an iPhone and I want to sell my iPhone. Right now, I bought this from the Apple Store at about, let's say, $1,000. So I go to Carousel, I find a buyer, and I sell it to him for $1,000 as well, because I just bought it on the same day, brand new. Over time, the phone's going to be worth less. Next year, the new iPhone comes out. But I really like my old phone. So this very phone which I sold, I want to buy it back. But 1 year later, this iPhone is worth less. It's worth maybe $500. So when I take back this iPhone, I only pay $500 for it. So that means over the course of this 1 year, I have made $500 because I sold my phone for $1,000 and I bought it back at $500 a year later. So that's where the essence of time comes in. Where over this 1 year, the price of my iPhone, which I sold to someone, has dropped by $500 and I profit off that. And options is kind of like that. I hope I haven't lost everyone. It sounds... There's a lot of numbers here, but I think the main point to take away is over time, you are able to generate profits. And adding that element in allows you to structure certain trades and certain option trades in a way that fits my very risk-averse nature, so that it gives me more potential opportunities to make money rather than just number go up, I make money, number go down, I lose money.
Right. Thanks, Aaron, for sharing. Maybe just to probe a little bit further as well, for during your 60-day challenge itself, do you have any realizations or any lessons to share with the audience as well?
So I've been doing this and I've been sharing it online as well for the entire year. Of course, whenever I try something new, I tend to lose money. And just when I was signing up for the challenge, June has been the worst performing month that I've had. It's the only red month that I've had this year. But that's because I was very used to the market rising up throughout the past few months. And so I also positioned myself a bit more biased towards the upside. I think what I've learned is, I think because I also know that there's a challenge going on and I really, really want to beat the S&P 500. So I'm taking on more risk than I naturally would have. And so that, of course, higher risk, higher rewards, but higher risk, higher losses as well. So that's what happened. So around July, I started, so we're halfway through it right now. So July, I went back to my original strategy, low risk, low reward. And I've been doing that throughout July, and now I'm in the green again. So I think it really goes back to the emotional aspect where, wow, if I'm risking so much, I need to make this work, and then I make silly decisions. I was actually freaking out, and my sister was there. I was calling her. I'm like, oh, I'm down so much today because I took a different strategy and there's different risk, and then I just closed it. But then the next day, it went in the direction that I wanted it to. It came back, and I was so upset about that. Yeah, so I think it's really just learning how to manage my personal risk tolerance, no matter what's going on, and I think I should stick to that.
Okay, actually wanted to also kind of emphasize the point that when we kickstarted the challenge, it was really the idea about getting real people, using real strategies in real time, not just back-tested and tell you that, oh, I made this amount of money and then see how great I am. So that was the main genesis of this entire idea here. So I think it's good that we have a varied levels of responses, different level of sophistication as well on this panel today. So enough about maybe options trading itself, because that's the challenge. Actually, the bigger panel that we're talking about, the bigger theme that we want to discuss today is to really focus on the idea of how modern investors are winning or investing today. And coming back to the topic, maybe I just wanted to dive a little bit deeper into individual KOLs or individual influencers and understand how has your investment strategy changed over the years? And maybe looking forward, what do you expect and how do you think these strategies will help with your own financial or even life goals moving forward from here? So maybe I'll get Kelvin to share a little bit more in terms of how things have progressed thus far and why are you at where you are at today, or why are you deploying these strategies today?
So right at the start of my investing journey, I started with dividend stocks. Then I realized that, dividend stocks are too slow. It's too single stock also. So I went to ETFs, which is global ETF lah. So then after that, I realized that ETF is still too slow. So why not just go to all in into one stock? Then after a few years, this is too fast. So it has gone from this journey. So now I'm back, like maybe I should go back to ETFs. So it has become this bell curve. I don't know if you have seen this bell curve or not. So like beginner is like sway by ETFs. Then at the top, there's this top of the bell curve that I should go stop picking. Then right at the end, I should go back to ETF. So I've gone through this journey and realized that actually ETF is the way to go for myself lah. So throughout it all, I also realized that options is also a better strategy for me. So I know like Don like to talk about passive income. Then every time I open Instagram, I see I'm at the China trip, I'm at the cruise because passive income. But for me, I don't really like dividend stocks. Not because I don't like passive income, because I feel that dividend stocks are a forced withdrawal. So the company pay me money, which that money actually belongs to the company, but they paid it out to me. So in a way, I'm taking forced withdrawal from the company. But for options, it's a bit different because I'm not selling my shares to get the income. But for dividends, it's as though the company is selling part of its capital and giving it to me. So I sort of replace dividends with options instead. And because as the portfolio grow bigger, I can generate bigger options income. And it's not just getting income just like that. Options can also play a part in my investing strategy. So for example, let's say I like the stock, I can sell a put at a very low price. If it goes down, then I get to buy the stock at a very low price. If it doesn't go down, then I get to generate that income every month. Then on the other hand, if I think the stock is very high price and I'm ready to sell the stock, I can sell a call. If it goes up, then sure, I get to sell at the price that I want. If it doesn't go up, then I get to keep the income. So I keep generating this kind of income without touching my capital at all. So that's how I've evolved from ETFs back to ETF, then from options to generate income.
Don, do you have a defense for yourself? Anything to respond to
Of
Kelvin?
course. Let him say finish before I interrupt. So I'll just like say, it's a perspective, not that it's wrong, but perspectives are always, in life, we choose the route because our life and our money is our own, right? And when you're talking then about dividend, I have one stock that will debunk everything that you just said, DBS. Great dividend stock and grow very fast. So it is in general true that many companies who pay dividends, they pay out a lot and hence retain very little for their own R&D and growth and innovation. But it doesn't hold true for every company. And I think for me, what I do is I look out for those exceptions. Because there's this concept which I explain in my book. So if this explanation is not the best, I apologize. You can read the book for more details. But I'll try my best to summarize it here, which is that in a portfolio, right? Imagine if you have 10 stocks, okay? And out of these 10 stocks, you have a few multi-bagger winners. Winners that go on to do more than 1x, 2x, 3x, and you have 10x. Okay? And then on the tail end, you have some companies that are very bad. Let's say they even go to 0. Okay, because bad luck. And in the middle, you have very amateur, very average kind of returns. Maybe say some 11%, some 20, some 40. Now, if you look at this portfolio over the course of the long term, you will realize that as long as you don't use leverage, the multi-baggers more than make up for any losses that you would have made, and it will have pushed your portfolio to such a high range that these losses become negligible. And I say this because that has been my experience in the last 10 over years. So I've been investing for more than a decade. And in the beginning, I think when you're young, in your 20s, right, we think very highly of ourselves. So I thought hey, I'm young, I can learn a lot of strategies. So I went for a lot of courses, I went for a lot of lessons to learn different strategies and frameworks. And I kept jumping strategies. Then later on, I realized actually, there will be many good strategies, but the best strategy is the one that really works for you. And the one that worked for me had to meet me at my preference, my risk, and my kind of lifestyle and time that I wanted to give that management. So that essentially cemented the strategy that I use now, which is I have a portion which is for the dividend portfolio that Kelvin talked about, and that one is very shook. Okay, and people say that dividend investing, you need a lot of capital. Actually, I always remind my audience that's not true. I can tell you guys very frankly what is my capital that I put into my dividend portfolio. It's less than $150,000. But because I built that over time, companies like DBS, if you look at their dividend history, and it's not just DBS that I own in that portfolio, it's many others, okay? And they're not banks, so you can see the dividend, it can be many different sectors. My dividend yield on that portfolio right now across the board is about 13 to 15%. That's something that no fixed dividend, no fixed income instrument will ever give you. And it's only possible with dividend investing over time. The keyword is you have to invest in companies that are good so that they will continue to grow. And as those companies grow, they will pay out more dividends to you. Then ideally, the capital share price should also go up so that you earn capital gains. But I think we can all agree if you've been investing for at least 10 years in the Singapore market like I have, the Singapore market quite sideways. Thank goodness now our government stepped in, so things are starting to move already. But for a long time, I was just watching my stocks just sideways. But it didn't matter because I had the holding power and I was still being paid a dividend. Then I will use that dividend. If I felt it wasn't going anywhere, they are not undervalued, there's no catalyst for them to increase the share price soon, I use those dividends to go and pay off my life and the holidays that Kelvin talked about, bring my kids on holiday, free money, why not, right? But at the same time, I reinvested some of these dividends into the US markets, where the capital gains were great. And I had so many multi-baggers like Palantir and what else? Actually, a lot. Yeah, you'll see them on my Instagram because I do talk about them. Actually, even in Singapore stock market, I have had a lot of multi-baggers. For an example, I bought DBS at multiple tranches. I'll share with you guys the very first tranche that I bought DBS at. It was less than $14. And at more than $70 today, you can see how that has been a multi-bagger. But I've added to my position over the years. And adding at a more expensive price, by the way, is harder to do because there's a lot of anchoring buyers that you have to fight by yourself. So in short, I just wanted to summarize, right? Like my strategy and what I have done in how I have changed to win in modern markets is I realized the markets will always be very volatile. It will always go up and down or maybe some sideways. But it's very hard for us as retail investors to predict. And if you're working a job and managing something else on top of that, so you have at least 2 to 3 big responsibilities in your life like I have, then it is extremely hard to put in a lot of active time to exchange that for money. I have looked at how Kelvin and the rest done options and I think, wow, actually I really want to make the kind of money that they're making as well. But I realized even if I were to replicate exactly what they do, right, I can't. Because the reality is that they can move very quickly and adjust or do that trade, and I'm like putting my kid to sleep. I only can touch the market after the kid sleeps, provided he don't wake up and come find me again. So those are the realities of life that I have to deal with. Hence, I need to actually look for strategies that work for me, which is why when I started out on this whole thing, all along my strategy is just, once I went through that whole try and error phase and try to figure out what works best for you, I decided I'm just going to stick to one and become a very skilled specialist in that niche, which is find great stocks that will grow and buy them when the price is right. Full stop. It's a very simple thing. It's what Warren Buffett has done. And then with options, I add on because sometimes you wait and the price never come down. So never mind. Now I add an extra layer to get paid while waiting. But on Shanghai's part, that is one limitation that I cannot do because while I can buy stocks that are let's say $1,000, and then in the US market you can buy let's say 3 shares, right? So you can 3 or 5 or 6. You don't have to buy so many. But I realized with options, when I was choosing my options, I was very limited. Because when one contract is 100 shares, stocks like Micron and a lot of the big names that are more than $1,000 are, wow, if you get a sign, it's that risk that I couldn't take. Would I put in, let's say, $50,000 if I get a sign? No, I like this stock, but I'm not going to spend $50 because then that messes up my whole portfolio, diversification and the exposure that I have. So I was limited to only buying options on stocks that were less than $100. And I have lesser options to choose from when it comes to making money. But I think Like, it works for me and I'm happy, and that's the big message that I would like to share.
Xuan Kai, maybe you want to share how you're winning today since Don has killed you.
Actually, it's quite similar to what Don said in terms of your life stage and life goals, right? It actually boils more down to your own self-awareness of who you are as a person and what you actually want to live your life with. So I personally started with a very strong day trading itch. I quit my job to actually day trade for 2 years before. So my itch was way bigger than anyone else's. Size matters, but it is what it is. Yeah, but with that being said, if anyone is considering that, please don't. There's much better ways to make money other than day trading, right? But then with that being said, it also is something in the 20s. You think you can take maximum kind of risk because I can always reinvent myself. If I lose my money, it's okay, right? I'll just earn everything back and then go and try again. When I'm in my 30s now, I don't know about you guys, but I appreciate a good night of sleep way more than earning money, right? The quality of life is so much better. And I've adopted this mindset of, I think investing should be as passive as possible because it fits me, right? But because my day trading itch is still so big, I still need an options portfolio to scratch that itch. If I can scratch that itch properly, then my long-term investing portfolio, I won't do anything stupid with it. And with that being said, then that long-term portfolio can actually reach my retirement portfolio. And that's the point of the options portfolio within the entire portfolio in that sense. And that's how I'm living my life now.
Okay, since Xuan Kai has talked about day trading, maybe I'll get Aaron to share a little bit more from your perspective. Maybe you have something to say to Xuan Kai.
Let's go, come.
Interesting. I didn't know that you day traded as well. It's the first time I'm hearing it. I used to day trade as well. Very similar experience in my 20s. I'm like, you know what? Can just take risks, just day trade. Then you build a certain itch, which is why it's easy for me to pivot to options trading right now. But for the same reason, and my sister can confirm that, I want a good night's sleep. Day trading is very stressful, especially if for whatever reason you can't close that position that night, and then you're like, how am I gonna do? And then the next day you still have. Well, back then I was schooling. And then I have to study. I can't study. I'm just looking at the charts, but it's not moving. The markets are closed. So I'm just staring at nothing, and I can't do anything. So like my whole life was paralyzed. And then the next day the markets open. It's either relief, or it's oh no, I lost so much money. I'm so stressed now. I need to make it back. So I need to focus, and then I can't sleep the next night again and again and again. So now we just like chill. So my version of taking a chill pill is pivoting more towards swing trading and then now options. So but when I first started, I also a little bit like I think most Singaporeans just start in like the Singapore market. Oh, but back then when I started, there was no Moomoo. So when I wanted to buy a Singapore stock, it was $28 to trade one lot, and you had to buy like I think 100 Singapore shares. So you wanted to buy DBS. Back then it's like was maybe $20. I need to throw how much was it like 100 shares, right? Yeah, so to buy like one lot, I need to put up like $2,000, and at $28 fees, that was a lot. So that's how I started as well. And then afterwards, I eventually moved to the US market, and that's when I started getting into day trading as well. But so at this point, it's actually a very similar story to Xuan Kai, where a lot of what I'm doing with my options trading actually stems from interest. So it's not fixed, it keeps changing. Recently, I've decided to change my strategy just a little bit again, because again, it's just pure interest. It's more to really scratch that itch that you have because you already spend so much time learning and applying it, that now, even though I don't rely on that as my main source of income, but it's still like, I just want to try. It's interesting. It keeps me up at night because I'm excited rather than being anxious. So it still keeps me up at night, but now it's slightly different. Yeah.
Thanks, Aaron, for sharing. Maybe lastly, we'll go to Audrey. How has your investment strategy changed, and how are you winning today?
Okay, so when I first started, I mean, my family wasn't very well to do, so I didn't have much money to even invest. Then my salary was like, what, 2K or something. So difficult to invest, don't even have money to live, you know. So literally I had to like resort to lobangs. This is why I'm called lobang sis, because I have to find lobangs to get a bit of money to go and invest. And then like Aaron, when I first started, it was with Singapore stocks, but each lot was 100 shares, which is then it would cost like at least a few thousand. And I didn't have that kind of money lah. So, but then I slowly saved. Then I started with Singapore stocks. But Singapore stocks didn't move. I remember when I first bought it, it was $3. After like 3 years, it was 3.15, I think. I'm not sure. So slow. And then so I had to like move to something like the US. And then eventually, I think it's a bit too risky. So I moved to global stocks. And now I'm doing options only because I think I have the capital to. Because I remember when I first watched Kelvin's video on how he trades like Tesla, and then I was like, brother trades at 100,000 per. I was like, oh my god, that's a lot eh. So I couldn't afford lah. My max trade was maybe like 5,000. So I knew that like options is not really a thing that I could do. So I knew that buy and hold was still a majority of my investment portfolio, and it did me really well. Like what Don said, if you find a really good undervalued stock, you can really get a very asymmetrical growth. But that requires a lot of studying, which I'm very thankful that today we have AI to help us do it, because honestly, I don't know how, like in the past, right, we had to rely on analyst report, we had to rely on like financial report one by one, go and read. Now you can just ask AI to help you to do it lah. But then be careful, AI got also hallucination lah. So, so you still need to have a bit of fundamentals, and then allow AI to teach you how to do it. Yeah.
Okay, thanks Audrey for sharing. I think maybe coming to the tail end of the discussion, right? When we talk about modern investor, I think the modern word is the important keyword here. And I think over the last 2 to 3 years, the most important part that is kind of like life-changing is really the idea about AI, about tech, about how things are advancing so quickly. And as Audrey have suggested and shared with us thus far, I maybe just wanted to dig a little bit deeper to understand maybe how are you using AI today, specifically in the finance context, because we are at MooFest, not at, so just wanted to get Audrey to share.
Okay, so for me, I have found that like you can never learn enough. So sometimes, if you read a blog, you cannot really answer the exact question that you're asking. But what I found is that if you use AI to ask questions and find out like, actually, why is it this or why is it that, it actually can teach you a lot faster. So what I did, and sometimes the problem with using a random AI is that you get a lot of hallucination. So it could be wrong. And I found that if you use like example a proprietary kind of system like example MooMooAI, then it can help you to give you more accurate answers. So I asked AI, like about my put options that I did. And I was like, so what do you think? Should I hold it? Should I roll it now? Or should I get a sign? AI actually gave me some suggestions which I implemented, I think. So that was how I used AI lah.
Okay, thanks Audrey. Maybe I'll get Aaron to share for yourself. How are you using AI today in your investments?
So I use AI in a few areas. I think you can start with the first one. So right now I'm doing a lot of options trading, and again there's that time element involved. So before I enter a certain trade, I do need to get certain numbers to be aligned. Some days are just not good days to enter. And one of the things that I need to be aligned is something, okay, it's all like very technical terms, okay, but it'll make sense after a while. So it's called implied volatility. Because of the strategy that I'm trying to sell or buy, I need to make sure that 2 of these numbers are not more than 1% apart. Now, before AI, I would just have to go to Moomoo and just open up and eyeball it. Unfortunately, I'm a very careless person. Sometimes I eyeball the numbers wrongly because it needs to be 1% difference, right? But then sometimes it's like 13.2 and then it says like 12.1. And then I'm like, oh, okay, it's kind of there. It's 1%, but it's actually like 1.1% difference. So I make that mistake. And that 0.1% difference can make me lose thousands of dollars. So I have made that mistake many times. And I think the biggest loss that I had in June, and the reason why my portfolio didn't do so well, is because actually I made a similar mistake again because I changed my strategy, right? And so I didn't use AI to help me check. So what I've actually done is get AI, instead of helping me check through every single day, which I used to do, right now I actually got AI to help me build a dashboard that shows me 2 numbers, which is those 2 numbers that I need to see, and it will tell me whether it's 1% difference. It has a green, it has yellow, it has a red. When it's red, it's more than 1%. When it's green means it's negative, which is what I want, and it's yellow when it's just within the 1% range. And it's not like AI looking at the numbers every single day and generating it. What it did was kind of create like a mini app. So what I do is I just press refresh and it pulls the data directly from the API, or basically from the providers, the data providers, and then it shows me those numbers. And so ever since then, I don't make that mistake anymore, because AI has helped me build a new tool that supplements my trading for me to trade better. So that's one of the first ways that I looked at. The second one that I have been actively using is using AI to tell me when I should enter a trade. Okay, now that sounds very sus. Okay, wait, so it's not analyzing like the markets for me. Okay, so I have already done my analysis. I have realized that when certain conditions are met, it's usually a very good time to enter the trade. The problem is sometimes I forget, or sometimes it pings my phone, but I'm out. I'm with my sister. She's talking too much. She's annoying me. I can't focus, you know. So during those times, I actually do want to enter the trade, but I'm not physically there. So we have a Mac Mini at home that actually runs 24/7. And when those conditions are met, AI would just start up. It would ping me. It will send me a Telegram message that, hey, these conditions that you said have been met. I'm going to help you execute a trade. Do you want me to execute a trade? It will just send me that on Telegram. And it will tell me what price is going to buy it. It will tell me how many shares it's going to buy. And it will pause there. It doesn't execute for me. And so that way, even though I'm busy, as long as I see the Telegram message that, my bot, he's called Bob. He's a turtle. So when Bob messages me like, hey Aaron, these things have been hit. Do you want to execute a trade? I can reply yes, or be like, hang on, let's wait for the markets, wait till I get home. I'm actually a bit scared. Maybe reduce from 50 shares to like 30 shares, and then it will go and execute for me. So that's something that I've been able to do, and that actually only happened relatively recently. It's a very new thing that I've been doing with Moomoo Skills. So Moomoo allows you to connect their entire like platform, or certain parts of their platform, to AI, and you can message it to help you enter trades. And just now I mentioned that I'm quite careless with like these 0.1 numbers, and it has happened many times before where I also do buy the wrong option contract, and I do buy the wrong trade, and I do end up making small mistakes like that. The good thing with AI, it's a lot easier, because normally I have the idea in my head and I can talk about it very easily. So I can also just tell, well, my phone, or tell Bob, hey, I want to buy like 100 shares of the SPY. Can you tell me the mid price right now? What's the current price? And I want the expiration date to be, usually it's for options. I screw up doing options. So I'll just tell like, hey, for the options contract, I want it to be, let's say 7 days from now. Look at Eastern Standard Time. Then just get me the contracts. What's the bid ask and the mid price? So it's literally just like that. And till date, because I've tested it quite a while, it hasn't made a mistake. Ever. I mean, it's yet, but hopefully ever. So that's what I have been doing, and that's how I've integrated AI into my workflow. But that's also because generally I already use AI to do a lot of things. It helps me with my videos, it helps me create content, it helps me post content and key in my finances as well. So all of that kind of integrates in where I can just use that one platform, one AI tool to help me now trade as well.
Right. Thanks, Aaron, for sharing. Maybe I just wanted to ask a side question, right? Everything that you discussed sounds a little bit sophisticated. I just wanted to know, like, what's the time invested? How was the process like getting up to speed, especially when you're dealing with like thousands or even hundreds of thousands of dollars when you are trading and using this AI?
Actually, the time, I think the largest amount of time invested is getting used to the tools. So specifically for setting it up to trade was actually quite fast. Like, you just tell Claude, can you install the skill? You give it 2-3 minutes to run and it's done. I think where it takes a lot more time is trusting the AI and trying to learn how it actually talks to you, how slow it can be, and how sometimes its intelligence feels very artificial as well. It's not very smart sometimes. So I think figuring that part out takes the most amount of time. But thankfully for me, because I'm not just using AI to trade, I'm using it to run a large part of my life. So I've already crossed that threshold. And once you cross that threshold, To get this up and running, I think was like 10 minutes. But then after that, do you actually trust AI? Now that's where you need to have put in a few hours in, or maybe a few days in, just talking to it and asking it to do things for you, and you will see it'll ask you to do very silly things. Okay, although it's not very applicable, not everyone in Singapore drives a car, but if you ask AI sometimes, hey, should I walk or drive my car to the car wash? It's only a 2-minute walk away. AI will say, oh, you should walk. Which doesn't make sense, because if you walk to the car wash, your car's not with you. So how do you do that? So yes, AI is not the smartest thing. It does sometimes do say silly things like that. So I think it's getting to know that nuances before you start using it to trade is probably where there's the biggest, the most amount of time spent.
Okay, thanks for sharing. Maybe to do a closing, Kelvin, maybe you share a little bit in terms of your current AI experience in the finance space.
I think for me, I came from a programmer's background. So when people talk about AI, I think it feels very intimidating. But I can say that AI has bridged the gap to the point of being programmers is almost not required anymore to be good at AI. So what I mean is like, okay, so Moomoo has this MoomooAI. So when people say, usually ask, because I run a Telegram chat group, once in a while people will ask, oh, this DPS has gone up, can buy. Then the other day, the stock went down. Oh, should I hold? All these questions can be answered by AI right now already. But of course, AI can hallucinate, so like can buy. Then they'll say, oh, you like law? Then they'll give you some financial advice. This is not financial advice, kind of thing. So what you have to do is like what Aaron said, you have to know where's the limitations of AI. Then ask it. Then you think around how to go past this limitation. For example, like DBS goes up, then you can say, can you analyze the stock like Warren Buffett? Then you go and pull all the data that you need to analyze this stock, whether it's a buy or not. So you just feed it more information to help it make better decisions. So during when I was running my options challenge, I actually throw it that I'm going to sell an options this week. Should I run it? It just replies me, if you're bearish, you do this law. If you're bullish, you do this law. Then like, so I give you a better prompt. So like based on the current events, current macro, whether the stock has any news or not, do you think this stock will go up or go down? Then it was able to give me a better reply lah. So that's the first level. Then the second level, which I've done already, which is to build a system around AI. So right now, every morning, I have a portfolio brief. They tell me like, oh, this stock go down, this stock go up. Why? What happened? Which stock should you pay attention to? What are the earnings that may come out that you have to pay attention to? Oh, by the way, this stock, I don't think this stock is good. Why you still hold? This kind. So this AI, it sounds hard to do, but actually I think everyone can do it now because, like I say, programmers are more or less useless lah. And that's coming from a programming background. So I think because it's gone from like last time you have to talk computer knowledge like 1 and 0s, that kind, assembly language lah. Then you go to one level up, which is programming language. Now it's another level up, which is English. So you can talk to computers in English already. I think everyone can build their own systems. I've already done it. I built my own trading system. I built my own operating system. Like every day it tells me what tasks to do to achieve my goals, that kind of thing. So the third level, which is not to even have any manual input at all, which I'm thinking of doing soon, which is like based on today's events, which is what Aaron mentioned just now, which is like based on today's events, these are the trades that you could take, or based on the goal that you want to achieve, these are the tasks that you should do today. For example, like maybe you haven't been spending time with your kids, or then the AI tell you, oh, you should spend time with your kids, these kind of things lah. Yeah, so I think everyone should try to learn how to integrate AI into their lives.
Okay, thank you everyone for sharing, and I'm conscious of time as well. So maybe as a closing, right, I just wanted to have everyone to share maybe one lesson or one key takeaway for today, and maybe you just go down the aisle. Maybe you get Aaron to share first.
Okay, so for me, I think that there is no one size fit all. Over here, we have so many different styles of trading and investing, and everyone has their own, will be able to find their own version of it. I think the best thing that you can do if you guys are trying to learn is to actually find people that you resonate with. Because we all trade so differently. Maybe find someone who you resonate with that maybe trades or would invest the style that you would like. And that usually comes more down to your emotion. Are you like a very risk-averse person, or are you more gung-ho? Like what type of personalities you are? And then you can probably take inspiration from, I guess, one of us or other people that you find online as well, or people that you know in real life, and then learn from them so that it's easier. Like what Don said, eventually you will probably find just one particular style that suits you the best. It may change a little bit, but you'll probably just find that one style that you want to anchor on.
I think for me, having invested for so long and hearing all the panels, so I think one thing is clear. Sleeping is also quite important. So I believe that even if you buy a stock and then you cannot sleep at night, right, it's going to be quite challenging, right? So I think choose the investing strategy that helps you sleep well at night is a great strategy that I believe I follow myself.
For me, I would say there will always be the next shiny strategy, the next hype strategy that we will all want to learn. I face that too. When I see someone making a lot of money, I'm like, I want to know how they did it. But there will always be a learning curve, and you may find out at the end of the day that doesn't work for you. So start with knowing yourself, and then pick the strategy that fits your life, your timetable, your lifestyle, and then that really go deep on that so you become a specialist in that zone. That's where you can make money. And then don't compare yourself to people who make more than you.
I think for me, it's time in the market beats time in the market. So even though we say we like trading, this is more of an ish kind of thing. But I feel for the general people is to just let investing do its thing, because every other day I always see people say like, oh no, the market is going to crash, or like, ladies and gentlemen, the Strait is closed again, and the next day, the Strait of Hormuz is open again, ladies and gentlemen. So I think a lot of these things is that they are just noise, and I think for investing, besides money and time, of course, for an investor, you also need the humility and the courage. So the humility is like, you have to be humble enough to know that the market is much bigger than you, and you don't know where the market will go. So you just have to trust that the market is doing its thing, which is to grow your money. Then the courage is that you just have to trust that tomorrow, next week, next month will be a better day, because that's the whole point of investing. You are putting money in and hope that the company is growing, the market is growing, the economy is growing. So you have to have the courage to put the money in, and not just like, oh no, every day, that kind of thing.
So I think with investing and personal finance, it's literally like the game of life. If you realize, the main thing we have here is every one of us tried a few different things before we settled on something that we really like. So it's a bit like trying food like that. You would like Japanese food, Western food, whatever food that you like, you need to go and try first. And people have no problems, right, picking a restaurant and spending hundreds of dollars on that restaurant when it's literally a risk that you're taking. Reviews good, everything good, okay, let me try. But then when it comes to investing, suddenly cannot. My hard-earned money, I don't want to try it. But then eating is okay, totally fine, right? So find something that you can dabble with, spend a small amount of time and money to try it, and then whatever that you find that really resonates with you, then you just double down on that. It's as simple as that. Really, really trying things out for yourself, most importantly, and whatever fits your life stage and goals. That's all.
Okay, once again, maybe as a moderator close, I think that I don't blame the education system, but it feels like Singaporeans like to have 10-year series or right answers. But I think throughout the entire discussion, you can see that there really isn't a one-size-fits-all or a right answer per se for investing. And I think with that, maybe we give a big round of applause for the panel discussion and the panelists.